Hi, I'm Will Hamilton, founder of SmartPath.co, and today we're going to talk about how to find the perfect price for any tax or accounting client. So figuring out a fair price can absolutely be stressful. You want to get paid what you're worth, but you hate the thought of upsetting or losing clients just because you raised your fee. A lot of clients become our friends. Your kids play in the same sports leagues. You're part of the community. You want to make sure that you're not gouging anybody, but you also deserve to make a profit. And so it's not always clear what's the best way to answer, hey, how much do you charge? Or why is my price going up? These are questions that you get asked, but you may not have the best answer for yet. And you deserve to pay yourself more. You want those better margins. Sometimes it feels like by the end of the getting through an engagement, there's no profit left. You paid your staff and you bought your office space and your technology, but there's no true profit left in that work. And you want to spend more time getting work done versus arguing about fees. So what's going on? Why is pricing in today's day and age in the tax and accounting industry, why is it so difficult? Well, we call it the pricing paradox. It's three specific things that happen that are stacked on top of each other that make pricing really hard. The first thing that's going on is it's hard to know what service clients really want to pay for. They may call you or email you or fill out a form on your website and they ask for tax preparation, but really what they're looking for is tax planning advice. How can I lower my tax bill? Or they may ask for a tax preparation return, but they don't understand that you need to get accounting work done before you can prepare that tax return. And they don't see the value in that accounting work. Or they may want to start a new business, but they don't really truly understand all the different elements that go into that. So it's hard to know exactly what services clients really want to pay for. Now, add to that the next piece of the puzzle, because you don't know what services the client really wants to pay for. Now I don't know exactly what service package to present. And the client needs a custom package that doesn't really match one of your preset options. And so where do you go from there? Then that leads us to the last part of this paradox is because I don't know what services you really want, I'm not sure what service package to present. I don't know how to price that package. Is the client going to see value at $500 a month or 5,000, right? You're not going to know until you ask the right questions. And so pricing is objectively hard. And every single firm that we've worked with in the last 14 years has had questions about pricing and has been able to move the needle on it once you focus on it, but it is absolutely difficult. These three issues stack on top of each other and they make pricing more difficult and unfortunately more complicated than it actually needs to be. So what happens when you get the right pricing strategy for your practice? Well, you can be paid what you're uniquely worth based on your experience, based on who you are as a professional. You can generate more margin to pay yourself, what you deserve, and you can start to hire quality talent or improve your operational systems or do the things that you need to do to really build the practice that you want. You can easily give clients a price that just makes sense. And when your price makes sense and it aligns with what a client is really focused on, they're going to be happy to pay for that service. You can also streamline your pricing process so anyone in your firm can quote for you. Have you ever felt stuck because you feel like you're the only one that can put together a proposal because you're using a bunch of different calculations and feelings that may be in your mind that you can't really teach somebody else? Well, once you have a defined pricing process, you can structure it in a way, and we're going to give you that structure today so that anyone in your firm can quote for you. And you can also deliver work faster because you're going to know exactly what needs to happen and in what order to provide that specific value that your client cares about most. A lot of firms spend a lot of time focusing on the workflow, but they don't focus on the different levels of service that a client can pay for. Once I know exactly what service the client's paying for, the workflow almost builds itself because now I just have to deliver that exact value that the client really wants. So the great news is there is a simple pricing structure that you can use to get out of the pricing paradox. We call it the perfect pricing template, and it's the exact pricing structure that we implement with firms when they're ready to increase their margins and stop giving away a bunch of work for free. Why do we use this specific template, this specific structure? Well, we've worked with thousands of small firm owners over the last 14 years, helping them increase their margins by getting their pricing right, getting the messaging around their pricing right. And there's a pattern for how to structure your pricing so that it leads to higher quality engagements with long-term clients. And so we've studied this pattern over and over and over with firms all across the United States. And now it's at a point where it's templated. Any firm, regardless of size, can follow this pattern perfectly to price new and existing clients. So there's 4 key elements that we're going to dive into that are part of this template. Number 1, we need to define the progress and the impact that the client wants to make. Number 2, we're going to calculate the different scenarios that need to go into that price and make sure we have all the right elements. Then you're going to customize that price for that specific client. And now I want you to go to the pricingtemplate.smartpath.co. Go ahead, grab your template, and we're going to go through it together. If you go to pricingtemplate.smartpath.co, you can download a free template. And we're going to jump over to the iPad so that we can walk through the template together and go through it step by step and really nail the perfect price for a client. All right, so when you download the template, you're going to see this triangle. And this triangle is made up of those 3 components that we talked about. Number 1, we need to define the progress and the impact that this client wants to make in their life. Number 2, we need to calculate all the different elements that are going to go into the price. And then number 3, we're going to need to customize this price based on the needs and the billing terms that we want to align in this engagement. So let's dive into this first section, defining the results. Notice right there under the header, it says progress plus impact equals a high value engagement. Clients care about making progress in their life. That's why they're going to pay us a fee for a service. They believe that that service is going to help them make the progress that is most important to them. So it's our job as the professional in the relationship, you as the tax professional in the relationship with the client, it's our job to make sure that we understand exactly what tangible progress this client wants to make in the next 12 months. And our pricing is going to start there, because if we can align our service package and our price, and the client can see exactly how that service package and that price is going to help them make the progress that they want, then they're going to be happy to pay. So over here, anywhere on the margins, I want you to write down the word mechanism. And let me get over to my pen here and just write down the word mechanism, because that's what we want to keep in our minds as we talk about defining the results. Our package that we put the client in, our price that we're going to give them for that package, it's going to be the mechanism that's going to allow the client to get the progress that they want, that they're going to define for us. So here's the first question that we need to ask the client to figure out the perfect price. What tangible progress does the client want to make in the next 12 months? And I want you to make a couple of notes in this box. The first note I want you to write down is going to be time frame. And we're going to focus in on 12 months or a year. If we go too far out, if we say 5 years, the client isn't going to really connect emotionally with that goal. 5 years is too far out. People don't know what they're going to be doing in 5 years, and the world is going to change too much the next 5 years. So we need to focus on the next 12 months. The next thing that I want you to write down is going to be top 3 priorities. There may be a client that wants to get 100 things done in the next year. You probably can't get 100 things done, but you can get their top 3 done. And so it's our job, again, as the professional in the conversation, as the advisor, to help that client identify, out of all the things that you want to get done this year, what are your top 3? What are the main 3 things that are going to move the needle the most? And if we can do that, even before we help them solve these things, we're going to give them incredible value during our discovery process, just by helping them clarify their thoughts and figure out, okay, out of all the stuff that is important to me, what are the top 3? That's going to provide huge value. So I want you to write down top 3 priorities and then huge value through discovery. Okay, now that's going to take us to the next section, which is what is going to be the tangible impact on their life or their business if they make that progress. And I want you to make a couple notes here. The first note is low impact equals low fee. And then we're going to do the opposite. High impact equals high fee. Okay. Let's say, for instance, a client is going to close an entity, but before they close that entity out, they need to get 6 months worth of back accounting work done. That is progress. Getting that back accounting work done is progress that they want to make. but the impact that progress is going to have on their life is very low because the entity is going away. They're not going to care about it anymore. So all they're probably looking to do is find the absolute cheapest possible way to get that 6 months for the bookkeeping done so that they can close that entity. So that is progress, but that progress is going to have a low impact, so I can't charge that much for it. Now let's look at an opposite scenario, high impact, a high fee. Let's say you have a client and they're going to not close an entity, but they're going to sell that business to somebody else in the next couple of years, potentially for millions of bucks. And so if you work with that client and the progress that they want to make is making sure that they have the right accounting systems in place so that they can really show great cash flow and great profit, making sure that their taxes are, really, really tight and tell the right story in the next 2 tax returns that they file. And they need you to go through and help them analyze their payroll and make sure that they're paying the right employees the right amount of money to make sure that they're increasing their profits and they have profitability on their labor. Okay. All of those things are going to have a very high impact because it's going to affect the sale price. And so you're going to be able to charge a higher fee for that type of high impact work. So not only do we need to identify what progress does that client want to make, but we also need to identify what's the tangible impact going to be on their life and their business. Now, if you don't get anything else from this training today, I really want you to get this because this is the secret sauce. If I can identify specifically with the client what progress they want to make in the next 12 months and what impact that progress is going to have on their life or their business, and then I can draw a direct line between that progress and that impact and how my services are going to be the mechanism that's going to allow them to make that progress, now they're going to be happy to pay my fee. They're not going to argue with me about my fee. And so here are the 5 major categories of client value that we see today's clients being happy to pay for. The first category is setup help. This is going to be like helping someone set up their QuickBooks or helping someone set up a new S Corp if they want to start a new business. Anything that we're going to do to help the client get set up and get rocking and rolling with a service that they want. The next category is going to be expert historic work. So this is things where you're looking backwards in time, you're looking historically, and you're simply filing or accounting for things that have already happened. That's historic work. Next to historic work, I want you to write down low value. This is the traditional stuff that's happened in this industry for a long time, but this is the stuff that's getting commoditized by technology, commoditized by AI. And we want you to embrace technology, embrace AI, embrace all the things that can help you automate and provide expert historic work faster and more effectively, because the client's always going to need it, but it's low value because it's a commodity. All we're doing is we're looking backwards and we're reporting to the IRS, we're reporting to QuickBooks something that already happened. So when you're looking backwards in time, when time has already happened, you can't impact the progress the client wants to make, only in limited ways because that time's already passed. Now, category 3, I want you to write down next to category 3, high value. Okay. Done for you management. This is the stuff that a client does not want to do. If your client is a roofing contractor or they're earning income on a W-2, working a job, they don't want to deal with accounting for their rental property. They don't want to deal with payroll. They don't want to deal with IRS issues. Category 3 is done for you management, stuff that you can take on. The client can offload off their plate. They can spend more time, being a roofing contractor or being an attorney or, being a real estate investor or whatever they're doing. They can offload that stuff to you. And that's high value for them to do that because that's going to get them time back. That's going to lessen their stress. It's just going to be a win-win for everybody involved. So that's category 3. Now, category 4 is tax reduction planning. I want you to write down higher value. Okay. This is the stuff that everybody wants. This is strategic tax planning, reasonable compensation analysis. This is the stuff that's really going to move the needle on the progress that the client wants to make. Everybody wants to pay less taxes because if I can pay less taxes, I can fund my vacation, I can fund my retirement, I can drive a better car, I can live the lifestyle that I want to live. I want to reduce my taxes. So category 4 is a higher value. Then category 5, better results planning. I want you to write down highest value. This is the stuff that you can do that AI cannot do. This is the stuff that you can do that no other professional in their life can do, because every decision, financial decision and business decision that they're making inside of their life can have an impact on their taxes. You are the only tax, professional. You're the only professional in their life that can help them understand how their cash flow is impacting their taxes, how they can do a better job of budgeting, and what categories to put things in so that things become tax deductible. Giving CFO level services, business advisory on top of business advisory, right down CFO services. This is just another name for CFO services. How can you help me use my financial data to grow my business? So when you look at what a client wants and what progress they want to make, we don't have to guess, right? Tax and accounting services have been around for a long time. Human beings have been around for a long time. We know what our clients want. It's going to be one of these 5 categories. So it's our job to do a couple things. We got to tie a straight line between the category value they want and how our service at a specific price is going to give them that. And then we want to package our services in a way where the highest value stuff equals a higher price that they're going to pay, but they're going to be happy to pay it because that's the progress that they want to make. That's the impact that they want to have in their life. So that's the first step, is we got to define all that. We have a whole training on setting up your discovery meeting and how to actually do that. So you can look for the discovery meeting training, but this is that first step of defining the value. But now that we've defined the value, now it's time to calculate. We need to calculate our costs, our services, our time, our profit. So in the costs column, I want you to write down things like third-party tech. So this is going to be their QuickBooks subscription, their Gusto subscription, any type of technology. Maybe they're a real estate investor and you need a specialized real estate investment software that's going to spit out numbers that can tie to QuickBooks. Any type of technology that the client's going to need in order to service them. And then the other thing I want you to write down is third-party services. Okay, maybe you're going to have a business startup package, and inside of that business startup package, you're going to help the client form the entity. You're not an attorney. You're going to use a third-party service to do that filing for you in the client's state. And so that's going to be a hard cost that needs to be part of calculating their price. So in the cost section, we're going to think about what are the third-party costs, what are the third-party technologies we need to use, and we need to account for that. Now, the next thing we're going to look at is the services. And again, remember, we're trying to align the services with the specific progress that the client needs to make. So maybe the first service that we know is they need a tax plan. Another service they need is going to be a cash flow plan. Another service that they're going to need is tax prep. Another service they'll need is accounting. And then the third service that you're going to need is advisory time. Let's just call it advisory, where you're going to meet with them throughout the year and you're going to help them understand the numbers in their tax plan, understand the numbers in their cash flow plan, understand their accounting numbers and their tax preparation numbers. And you're going to advise on all those numbers to try to improve them and help them implement the actions that will get them the best result. So now that I know my hard costs, now that I know my services, now I need to start looking at my time. We're not suggesting that you need to bill by the minute. That's not what we mean by time. But as a firm owner, I do need to have a general basic understanding of how much time is it going to take me to implement that tax plan. How much time is it going to take for me to implement that cash flow plan? Let's call it 2 hours. Tax prep, let's say you're going to spend another 4 hours on that. Accounting, let's say you're going to spend an hour a month. So we got 12 hours on accounting. And then advisory work, we're going to have at least 4 meetings throughout the year at an hour each. So let's put at least 4 hours in there. So we got 3 plus 2 is 5, plus 4 is 9, plus 4 is 13, plus 10 is 23, plus another 2. So we got 25 hours of engagement time with this one client. Why? Because we understood what progress they want to make. We looked at the services that we're going to need to provide to help them make that progress. And then I need to see a general estimate of how much time it's going to take for me to deliver those services. Now, the last column is the most important column here, because I don't just want to charge the client for my time. I also want to charge them for my expertise and extending that expertise in their specific situation. and all of my staff is going to be working on their stuff and not working on somebody else's stuff. There's value there, there's profit there. And so on top of the costs, on top of the services, on top of the time, I need a value margin. This is going to be right at the top, profit. This is my pure profit for offering this service. So it could be $100 if you really wanted to hook this client up because they're a friend or family member or whatever it may be. It could be $1,000, could be $10,000. You as the owner of the firm, as a business owner, get to decide, what do I want my true profit to be for this engagement? That's going to be your value margin. So let's say here, it's going to be $500. So let's do a little bit of quick math. We got third-party tech costs over on the tech side. Let's say we got $600 a year for QBO. And we got another $500 a year for Gusto. And then let's say we got $500 worth of filing fees through an entity formation service. Okay. So I got 600 plus 500. That's going to be 1,000, 1,600. Then let's say we got 25 hours of time, and let's say a blended rate for time for this client, I want to charge $125 an hour. So, and then we have a profit margin of 520. So let's take 125 times 25 hours. I got 3125 in time. I got $1,600 in hard costs, and I got another $500 in profit. That's my value margin. So right here down at the bottom, we have a total contract value of $5,225. That's the total contract value. Now, this is how I want us to start thinking about our pricing. Notice that we're not charging just by the hour. We're not charging by the tax form because there is no tax form that's going to allow us to really account for all of this value. But we are going to look at the costs. We're going to look at the services. We're going to look at the time, and we're going to look at the value margin. Those four components together are going to give us a total contract value. And I want us to start thinking about clients in a total contract value way. Now that we have 5225 as our total contract value, let's go to the next step, and we're going to customize our needs. Does this client have any custom needs that we need to account for? Do they have a partner in a business that's also going to need a K-1 or some other type of filing? Do they have tax preparation in multiple states? So instead of just 4 hours for tax prep, I really need to account for 6 or 8 hours because I got to do filings in multiple states. Does this client want to open up a certain type of entity in a certain type of industry that I'm not really familiar with? So I need a lot of time to research. So let's say partnership. Let's say multiple states. And let's say research. Okay. Notice how we're customizing this for this specific client. We can start off with a base level fee all we want, but if we're really not thinking about our pricing on a per client basis, we're going to be leaving valuable margin and profit on the table because we're not customizing this specific engagement for this specific client. So now that I've identified my custom needs, I also want to look at how do I want to customize the billing terms for this client? Do I want to get that money all up front? Do I want to collect half up front and then amortize the other half over 12 months? Do I want to charge them quarterly? Do I want to charge them monthly? How do I want to charge this client? This is completely up to you. If you charge them monthly, that's going to be more cash flow for you throughout the year. And make it easier for the client to pay instead of having to, create one big bill and have them pay everything up front. You can collect that money over a 12-month period or a 24-month period. It's completely up to you, but you need to think about how do you want to set up your cash flow and what's going to make sense for this specific client. And for this client, I'm going to check off monthly and a custom upfront amount. And so let's say I'm going to grab out of that $5,225. I'm going to grab $1,000 up front, and then 5225 minus 1,000 leaves us 4225 divided by 12. That's going to leave me with $352 a month after that to collect from this client. So I have identified what progress the client wants to make. We identified the 4 areas of calculation that we need to look at their price. We're also going to customize their price. So let's say for the partnership, the multiple states, and the research, I don't want that to be 55,225. I'm going to add an extra 1,000 to it. It needs to be 6225. Then I'm going to collect $1,000 up front. I'm going to do a monthly payment plus a custom upfront amount. So now let's redo our calculation. It's going to be 5225 divided by 12. So that's going to be $435 a month. And let me just erase this so we can have it look pretty here. It's going to be $435 a month. So now that I've identified an actual perfect price for this specific client, now I can give the client some options. And when I give the client options up to 3, we don't ever want to do more than 3 because it's going to confuse the client. I always like to give at least 2, so never just 1. It's going to put the client in a mind space of, hey, which option is best for me? This client, or they're going to think that you're not trying to hard sell them, which you're not. You're simply presenting the options. You may recommend the option that you think is best for them, but you're treating them like an adult. You're letting them choose. They're not going to feel sold to, and they're more likely to say yes because their brain is going to be thinking about which option is for me, instead of if you only give them one option, it's going to be a yes or no calculation in their mind, instead of which option do I really want. So let's say option 1, we're just going to do tax prep only. And because we already thought about what that was going to cost, we had 4 hours at $125 an hour. That's going to be $500. Option 2 is going to be tax prep. Let's call it plus the entity formation. I'm not going to do the math, but it's going to be more than $500. And then option 3 is going to be the option that they really want. It's going to be tax prep plus advisory plus forming the new entity plus doing all the accounting for them so that they can focus on being a real estate investor, not an accountant. And for that, it's going to be $1,000 up front plus $435 a month. Now, whichever option the client chooses, at this point, I've gone through the math and I've specifically identified and made sure that there was a value margin in any of these options that I present. So going through the process and going through the exercise of identifying a perfect price has showed me, hey, maybe my tax prep doesn't need to be $500 because there's no value margin in there. Maybe option 1 needs to be $650. And maybe option 2 is going to be $1,250. And then option 3, we've already identified the math on that one. So what we're trying to do is we're trying to look at a client holistically, really figure out how we can create a margin that's going to work for us and work for the client. And then we're going to give the client the options and let them choose what is the best price for them. So let's do a quick review just to make sure we got the main idea here. So first thing we need to do is we need to download the pricing template, go to pricingtemplate.smartpath.co. Then we need to define what progress and what impact that progress is going to have in the client's life. Then we need to calculate our 4 different service elements. So what are the hard costs? What are the services that I need to provide to help them make that progress? How much time am I going to spend delivering those services? And then what do I want my true profit margin to be? And then we need to customize that price for that specific client. And then once we do that, we can give the client up to 3 different options so that they can pick the perfect engagement level for them. So I hope this gives you a structure that you can really use to perfectly price any new or existing client. You are worth generating a profit, right? You're worth the profit that you want to generate for the engagements that you do. And this pricing template will allow you to quickly and easily do that for any client. Thank you for being with us today, and we'll see you next training.